This week's seminar, why Calgary is going to boom in 2023. We're going to, like I said at the beginning, we're going to go through a lot of economic indicators. We're going to go through, why Calgary has the economy that, and Alberta has the economy that can help us boom, population, quality of life, all kinds of factors that are going to contribute in 2023 that we think is going to contribute to a boom.
Yeah, and right at the end, we'll give you the major factors as well. There's two big ones that everybody has to understand when you're a real estate investor. And if you're not from Calgary, the best thing about this presentation is that you can use these economic indicators and see how we're analyzing it to work out if Calgary is going to boom or not. And you can work out if your city is going to boom. We know we have a lot of followers outside of Calgary, and you can definitely use these tools and work out what's happening in your city for sure.
Yeah, so the number one thing we're going to look at is oil and natural gas. Now, everybody knows Calgary is an oil city, but well, as we get along further in this presentation, it's not just those two natural resources that are going to get us ahead. But what I want to show is that, we're seeing articles out there that are very, very positive about oil production, despite the world shifting to a green economy. The transition is going to take many, despite what some people think, we're not going to change overnight to wind and solar. But in the meantime, while we are going through this transition, Alberta is super well placed to be a major oil player and help everybody with the transition. And OPEC, just earlier this month, OPEC came out with a forecast, and they see a rise in oil production by 2.25 million barrels a day in 2023, and that's about 2.3%. That's massive when you see how much oil is produced in the world, and Canada stands to benefit from this. And even though we are kind of landlocked, we don't have a whole lot of export ability other than to the States. Well, we can ramp up production and ship more down there. So we're going to benefit from this increase in demand on the oil side. And other people are predicting a return to $100 oil. Right now, we're at about $74 a barrel, something like that. There we go. We're at about $74 a barrel. They're predicting that with the war in Ukraine and OPEC curtailing a bit of production, we're going to see oil at $100 a barrel again. Doesn't help when we're trying to fill our gas tanks, but it benefits our economy.
Yeah, and so how does that translate? I know Tim and myself, we've been working with a lot of oil clients. We work with one of the richest families in Calgary that are in oil and gas. And we can definitely, this is translating to companies wanting to keep their staff. We heard this earlier last month where the big companies out there are handing out bonuses. They gave mid-year bonuses to their staff in the oil and gas sector, and then they're giving more bonuses at the end of the year. And why are they doing that? Because what happens, and we've seen this, Tim, before, what happens is a lot of money gets thrown around, and a lot of the engineers and different sorts of people in the field, they get offered better money. So companies out there don't want to lose who they got. Apparently, it's really hard to find good people these days. They are hiring, but they're never going to get Tim back to the level that they once were. There's no need to. They found a way.
Yeah, they increased their efficiency so much in the last downturn that a lot more things are automated. A lot of the jobs were cut out. That now the staff that they're keeping, they're very, very, what would you call specialized staff, and they're hard to keep, like as I was saying, because they can always jump to the next company that's going to pay them more money.
Yeah, and you'll see takeovers, you'll see massive investment. I think yesterday the Calgary Herald, there was like a $1.7 billion project coming in. So you're going to see this in the oil and gas sector, which means more jobs and better paying jobs. They're already earning a lot of money. We've actually seen, Tim, this year, a lot of our oil and gas execs either upgrading their homes, and spending the money basically.
Yeah, or buying vacation places, holiday homes.
Yeah. So it's once again back where it was, really.
And the second part of that went too far. The second part of that is the natural gas market. We're seeing, all you have to do is look behind us there and check out the weather and the snow and stuff like that. It's going to be minus 30 tonight. That I know that's just one cold snap, but Europe is going through this huge supply crunch because they're, sort of shrinking Russians Russia's supply. So the natural gas market worldwide is booming and people are shipping liquefied natural gas all over because that Russian supply, they don't want to buy it from Russia because it just fuels their war machine. So what we see is overall, the price of natural gas is going to go up. And with that, Alberta's economy booms again. Not only do the provincial and federal governments get more royalties, tax money, basically, it trickles down because these companies are making more and more profits. They're spreading it out by, hiring more people, paying these people more, and all that money just trickles down into the economy and it benefits everyone.
Yeah. And Tim, we're already at the price point where we need to be to it.
Yeah.
For there to be massive profits.
Yeah. So because they're expecting a harsh winter this year and the limited supply from Russia, they're expecting natural gas prices to be very, very high this winter. And, if we get a warm summer, then it translates into high prices as well, because everybody's air conditioners are fueled by natural gas down in the States. So if we look at the oil prices, let me just move something again. Right now, they're around $74 a barrel, but the trend, there's the trend. The trend is going back up, and that's why we're seeing some analysts predicted to hit $100 a barrel again this year. But what we're seeing is with the growth of the world economy, we're coming out of the pandemic, all these countries are going back to full employment. They're all buying more stuff. They need to use more energy. So that's going to keep the price of oil quite high, at least through 2023. Beyond that, we don't have a crystal ball, but we do know that in 2023, oil prices are going to remain high. And same thing for the price of gas. If you look at what the price is, this would be American gas. It's $6.60 right now. Very, very high compared to, the years before the pandemic and leading through the pandemic, where we were right around $2. So if you look at the trend, again, you see it trending upwards. We're going to see that throughout 2023, 2024 and beyond. We don't know.
Yeah.
More supply may come on, with more exploration. But through next year, that's going to contribute to the boom in Calgary. Now, moving on away from oil and natural gas, if you look at wind and solar and how Alberta is leading the country in producing wind and solar power, just these two things alone, 5 years ago, wind and solar accounted for 9% of our electrical generation in Alberta. Right now, it's at 22%. So we're almost a quarter of our energy, our electricity is generated by wind and solar right now. That's massive. That's a huge replacement of the oil and gas. And it shows that this massive spending, what would you call it? Investment into these industries. Again, whenever we get investment, whether it's government investment or whether it's private investment, that money goes into the economy and it trickles down throughout the whole economy.
Yeah, we've got a client that owns a lot of land out on Highway 8 going up to Brad Creek, and that whole parcel is going to be solar. And so it's a huge investment to get into it, but that's what's coming, Tim, and that's just going to it's just going to be better for Alberta, better for Calgary.
Yeah.
Just hope there's a lot of fun.
Well, that's one thing we can count on in Alberta. It's very windy here, especially south of Calgary, and with the Chinook winds all the time, and it's very sunny. Calgary is one of the sunniest cities in the world, and as you move further south in Alberta, that sun is shining all the time, so it bodes well for electrical generation through solar power. Again, it's not going to replace oil overnight, but as long as there's investment coming into the province, personally, we don't care which type of energy they're investing in, as long as we get investment into the Alberta economy, we're going to see our real estate markets very, very healthy.
So this goes hand in hand, Tim, just quickly with oil and gas being where it's at and being a bigger sector in Alberta and Calgary. If that's healthy, and they are looking at alternative solutions here, which is what everybody wants, really. It's win-win for us living here in this city and going forward if all of that helps.
Yeah, and as we transition away from oil and gas over the next 40, 50, 60, whatever years it is, it's going to help with the cost of living, because we won't have to pay to clean up the environment. We'll be using cleaner sources of energy. So the next slide on cost of living, that's a huge factor when you're talking about the real estate market in Alberta and Calgary in particular. There's a lot of things that factor into our making it attractive, not only to buyers here, but buyers that are, immigrants that are coming in, and investors that live in different parts of the country that choose Alberta to invest in.
Yeah, and Tim, I'm not sure if it's in your slide, but talking about the immigrants coming to this country, Trudeau government's predicting up to 500,000 people coming into Canada as a whole, and then roughly they're estimating 10% of that to come to Calgary and Alberta. And so where does that kind of fare from where it's been previously? In times like this, it's always been around 30,000 people moving to Calgary roughly.
Yep.
And so it's going to bump up, another 20,000.
Yeah, so you get 50,000 people moving into the city. And if you own rental property, you're going to have that much more choice when it comes to tenants, because there's going to be more people coming in looking to rent. And we're seeing that in affordability, which will be our next slide. But what we want to key in here is that Alberta is attractive because we have no provincial sales tax. We've got no healthcare premiums. Our tax rate is lower than most of the other provinces. Our after-tax household income for an individual is over $61,000, and that is way higher than the Canadian average, which is 54,000. Quebec's at 51, BC's at 53. Now, Ontario's closest at 55, but you can see that we have a very, very average or high average income in Alberta, and that helps stimulate the economy as well.
And just quickly, Tim, when purchasing a home here in Calgary, a lot of people, we've been selling a lot of homes to people in Ontario this year, people moving out here, and they're always asking us, how much do I need to close? And you only really need to pay your lawyers. Like, to close on a property here in Calgary or in Alberta is roughly under $2,000.
Yeah, there's no land transfer tax like a lot of other places.
So you have to keep that in mind. Like, that's a killer when you are buying out in those other provinces. You don't have to do that at all here, which saves you thousands of dollars.
Yeah, and if you look at down the bottom paragraph there, the average monthly rent, this is from rentals.ca. They accumulate these stats. Calgary's average monthly rent, this is for a 1-bedroom apartment, is $1,473 a month. Toronto is at $2,532 and Vancouver $2,633. This is the average price for a 1-bedroom apartment. Now, the closer you are to the downtown centers in Vancouver or Toronto, you're going to see a lot higher rental rates than that. But Calgary is still very, very affordable. So you've got the population making the most money and paying the least amount for rent.
Yeah, and you really have to think with service providers out there or low income earners out there in different provinces. You look at just the cost of living here, it just makes it that much more affordable for people. I know that's the next slide, Tim, but that's what's going to happen, and we've already seen it. We had a police officer from Ontario move here that was earning the same amount of money there. He could earn the same amount of money here, sold his house out there, paid cash for a property here in Okotoks. And now he's got 2 kids. The quality of life and the affordability is unbelievable. It's life-changing. So when you see that happen, and that's a policeman, could you imagine someone who's a chef or a waitress or somebody working at the airport? They could do the same job here and then just have that much extra money in their pocket at the end of the day. Yeah.
So I just got to explain this slide here where it says the average home price in Canada hits $632,000. If you look at Calgary's average price, this is for November, because we didn't have December stats yet, 490,000. So we're way below the Canadian average, and we're way below Toronto and Vancouver. They're both over $1 million. What's interesting about the average price being over $1 million, it's actually dropped quite a bit in the last few months. And that has an interesting story about people who tried to buy pre-construction in Toronto. But you can see how much lower our average price is. And like Azad said, for quality of life and affordability, younger families are moving here because they don't have to be stressed about the amount that they're paying for living, because the rental rates are low and the house prices are low.
Yeah, no, it's crazy. And wait till we get into infrastructure and things like that and lifestyle here in Calgary when we tell you why it's so good and why we think it's going to boom. But a funny story last night on CBC, I don't know if anybody's seen this. I could feel the pain of these investors. They bought pre-construction in Toronto a year ago, and they were buying homes for 1.8 million, I think it was 1.9 million, and they're coming up to close, and they went to the bank, and now the market has shifted out there, and the property prices have come down to 1.6. So the developers are demanding they close or they'll lose their deposit. So could you imagine buying a property on 1.8, 1.9, signing on the dotted line? And that's why Tim and I always say, be cautious when you're buying brand new, because they're the first properties to go down in value. The reason being is supply. You have no control over that, which we're going to get into. But these poor people were speculating, and that is the worst thing you could do. And what they did was they bought for 1.9, and now the properties are worth 1.6. And the reason why they can't qualify now, not only do they have to come up with the extra funds. So when a property, this is what you guys need to understand, when a property comes down like that, when you buy pre-construction, you still have to come up with the funds on your own to close. I don't know where you're going to get those funds. It would have to come from a family member, because no bank, no hard money lender is going to loan you on an investment that's worth less than what you paid for it. The second thing happened with these people is that interest rates went up so much. So even on the 1.6 value now, because interest rates went up and you have the stress test on top of that, right? They would have been borrowing at 2.9% probably. Now they're borrowing at 5.5 plus the stress test, which is another 2% on top of that. You're at 7%. So they can't even qualify for a loan, even on the lower amount of 1.6. So they're double hooped. They're hooped on getting financing, and they're hooped on coming up with the rest of the deposit. So normally at this stage, people just walk away from the deposit.
So pre-construction is an investment strategy that you really, really have to understand the market that you're buying the pre-construction in, whether it's a condominium building that's being built and you buy in that, or whether it's expensive houses like I was just talking about. We personally stayed away from that for some time. It was very, very good before the boom in 2006, 2007 in Calgary here, but we stayed away from it because there's been so many recessions since then.
And we've seen some investors going out there, and it was Ontario-based investors this year buying out in newer communities in Calgary. And guess what? Those properties were selling for $630, and now they're back down to around $560,000. So that has even happened here in Calgary in the newer communities. We have to stress that it's very risky.
Yeah. So just a quick look at the next slide. The housing affordability indices for 2022. You can see Montreal is probably right in the middle there. Calgary is cheaper to live in, it's more affordable to live in or to buy houses in than all those other major cities in the east, other than Quebec City. Quebec City is its own its own unique city, and Winnipeg, I wouldn't really call that east, but really, who wants to live in Winnipeg? And then Edmonton is a bit more affordable than that. But again, then you got to watch the Oilers and cheer for them. Nobody really wants to do that. But you can see where Calgary is positioned. It's very, very positioned very well going forward. It's very affordable.
Yeah, and when you look at that, you're right in the middle. That's where you want to be in. It's a safe bet. And once you get into, Tim, as I said, the lifestyle of Calgary and how it compares, even traffic and things like that, Calgary only has one way.
Yeah. Okay, the next slide. Another reason why we think Calgary is going to boom in 2023 is jobs. Our unemployment rate is steadily falling. Like I said before, the energy sector is going flat out. Another thing we want to mention, and we mentioned this quite a bit throughout the year, is the new tech companies that are moving to Calgary. There's a lot of empty office space in downtown Calgary, and these tech companies are looking for cities where their workforce can move to, and it has to be affordable, it has to have good quality of life, and, maybe a young population, lots of things to do. Calgary fits that bill. There's tons to do. So these tech companies are keeping satellite offices or even their head offices here because of the factors that Calgary has going for it.
Yeah, and just one other thing, quick story. We work with a group called Group the Nuts, they call. They're out of Victoria. They do own a lot of developments here in Calgary. I think they're upwards of 600-700 units in total. And they hire tradesmen to work on their properties. They just bought some condos out in Victoria. And they were telling me the other night that their tradespeople, they can't find anywhere to rent. So they can't live in Victoria. They have to live like an hour away from Victoria and in the middle of nowhere and then travel into work every day. These are just simple tradespeople. And we were having this discussion that they're going to lose people like tradespeople that have to, live their life like this, travel into work, be in traffic and take an hour, where they could live in Calgary, they could live right downtown, they could live cheaper, and they could get paid more than what they're earning in Victoria. So the writing is on the wall when it comes to actually just satisfaction at work and earning more money in a city like Calgary.
Yeah, and on the distribution side of things in industrial and commercial real estate, we're seeing a lot of companies move distribution hubs and warehousing to Calgary. All you have to do is drive up Highway 2 going north out of Calgary, and the massive amount of warehouses that have been built over the last 5 or 6 years. We're becoming a distribution hub because it's cheaper to operate a business in Alberta, and it's cheaper for those employees who work within the warehouses and the shipping departments to live as well.
There you go.
Yeah. So wage growth is increasing. We've talked about that, how Alberta has one of the highest average wage rates in the country. Because of the kind of employment crunch, not everybody has gone back to work after the pandemic. So in order to keep people, they have to increase their wages, and it just naturally drives up the wage growth all across every sector in Alberta. Moving on, infrastructure. This is one thing that we see a lot of because we're driving all around town. We see every quadrant of the city we're always in, looking at houses, looking at buildings, looking at land, stuff like that. The amount of projects that are going on, we don't see the massive amount of cranes putting up high-rises downtown like we used to in years past, but we do see all kinds of infrastructure projects going on. And these things cost a lot of money. They need a lot of companies to do the services for these things. If you look at the ring road that is almost complete, I think it's got another 2 years to finish the west side of that. That was something like a $5 billion project. So there were so many people employed in building that road over those 5 years. It's just unreal. And now you don't see it because it's on the outskirts of the city, and unless you travel by to see the construction sites, you don't see it. It's not like if you're downtown and you can see a construction crane put up a new building. Yeah,
and we say this all the time about Calgary. It's overbuilt. I mean, I think they even got in trouble with Stony Trail because they were building like 3 lanes each side, and they were saying, hey, we don't need this right now, but they went ahead with it anyway. So getting around the city is unbelievable, especially on that ring road. I know with Tim and I, we're on there all the time, getting set down south or even coming up the east side of the city. And once it's complete, it's going to be a game changer. I mean, that South Lake is already a game changer. Before, we'd have to sit in traffic down the Crown Trail for 40 minutes to get out of the city to go to Okotoks or somewhere like that, or even to get to Mahogany or Auburn Bay, those areas. Now you can zip on that thing, no lights, and get there within 20 minutes, which is unbelievable.
Yeah, and speaking of roads, the province just committed a number of millions of dollars to improving Deerfoot Trail. Deerfoot Trail runs right through the city. It's always been kind of a sore spot for commuters because the way it's been built, it has bottlenecks around bridges, around certain key areas. The province has committed a vast amount of dollars to improving it, to widening it to 4 lanes, to replacing bridges and stuff like that. That's another road that's going to, require a lot of money, a lot of services to work on it. All you have to do is look around town and see, in the Stampede, they're building they're adding to the convention center there. That's a massive construction project.
Up there now.
Yeah. And things you don't see, they're improving the waterworks. all around town. They're improving, roads, they're improving parks, things like that. So you may not see this money going into it, but you know that there are companies and employees and service people that have to work there, and that's contributing to the growth of the economy. That helping the economy move forward, and we're going to see that all the way through 2023, and I foresee that going for the next 10 years.
Mm-hmm. And some of the other big things in there, Tim, the South LRT Green Line. And these are the little things that you have to keep on. So we're talking about Calgary as a whole. And what you really have to do is then work out communities as a whole. What's going on within that community? We picked apart Bowness. We didn't like Bowness for the longest time. If anyone lives in Bowness, don't send me an email because we love it right now. And I'll tell you why we love it. They put in a new superstore. They put in a new farmers market next door to COP. They got a whole new development going in there with more shopping. They redid the little town. They redid the streets. They dug the whole thing up, put in bike lanes. They put in footpaths. They put in gardens like along the street. I mean, all of these things beautify a community. And when you see that, and this community, Tim, is 12 minutes from downtown. The river is just there. You've got Shouldice Park. My kid plays football now. I'm at Shouldice Park in the fall every weekend. It's a wonderful facility that's in this city. I didn't know, Tim, that every footballer in the whole city goes to Shouldice Park every Saturday. That is crazy. But at the same time, you have to break it down in your community on what's going on, what's being built, what enhancements. I know I was up near Optimus Park or the other one, Tim, where the Royals play out of
Glenmore Park.
Glenmore Park. They're ripping the whole park up. They're putting in a new arena. They're putting in a new running track.
Yeah, field house too.
Field house, a whole new facility. So what's that going to do with it, to a community that is another 10 minutes from downtown? I mean, you've got private schools there, you've got this whole new athletic field going in, and already, Tim, you have people knocking down houses and putting up brand new infill. They're putting in multifamily now, they're putting in townhouses. So you have to keep an eye on what a community is doing and how it's turning over. And that's what we love, Tim. We study this every day. And then once you see that community take off, guess what? What community is behind it or beside it, and what's going to happen to that community. So
yeah, and those are what we call spillover entities. And those ones are the ones that we really, really like. We would like to put investors in, because you see all the money going in and improving these inner city communities. Azad was talking about Altadore and North Glenmore.
Mm-hmm.
You go one more further away from that, across RC, and you're in Glenmorgan, the Three Glens. Those are the next ones that are going to take off. Those are the ones that we would want to be positioned to put investors in, so they can take advantage of the next round.
Yeah, and
improvements.
Tim got that spot on. And just for the people out there that don't know the communities, so we're talking about, they say here is Altadore and what was next door there? Glenmore, North Glenmore, and then you have a main road, Crowchild run through it, and then there's 3 communities just in there that run all the way to another main road. And the thing is with these 3 communities, just so everybody can understand this, up on the hill. So if you go further west from those communities, you're looking at $700,000 plus. Okay, and then you have more private schools up on the west side on the hill. So you have all these communities down below the hill locked in, where the only way they could go, Tim, is up. So that's how we dissect it, working out community by community. And we're going into communities that we love right now, even in the Northeast, that we wouldn't go in. There are still some communities that we wouldn't touch. And if you really want to get a hold of that, please go on our Crew TV, our YouTube channel. We interview a tenant in Forest Lawn, and it will spell out exactly why we don't go into that area or neighboring areas. And a big factor, just to get it in there, is because there's certain things in those communities, Tim. There's halfway homes, there's rehabilitation centers. There's some other things in those communities that are going to attract people that aren't going to fare well within that community to make it go up. And that's just how some communities are built. There's nothing wrong.
Yeah, that's just a part of life. That we're in a big city, and there's going to be that part of society that is going to just happen in a big city. Just because it's there and the house prices are low doesn't mean we want our investors to buy rental properties there. There are better places to spend your money. You will get a better return in other places.
Yeah.
And that's what we're in this for, is we're in for our return on investment. And if that community, because of what's in it, is going to give you a lower return on investment, well, we're trying to do our clients a favor and get them a higher return on investment, and we will steer them away from that.
Yeah, so we need to stress that. You can dissect this to individual communities, what's going on. You can pick apart a community. Why would people be moving there? But as Calgary as a whole, you can see how many things are on this list here. There is a huge update.
This is all public investment. The governments are, footing the bill for all this. One thing we don't have in here is the private investment, and all you have to do is look at all the infills going in, some of the more desirable communities. People are knocking down single family homes. They're putting up duplexes. They're putting up fourplexes, townhomes, things like that. So there's private investment going in to improve the city as well, and that's what it's really hard to quantify that. But all you have to do is drive around and see what's going on in your neighborhood. Look at the bins that are outside of houses. People are renovating their houses. They're improving things. So that all of this investment into our city and whatever city you're in, if you see the same thing, that people they like the quality of life there. They want to live there. So they're improving the city, and it's going to help Calgary boom next year.
Yeah. And for example, I know I was looking at the future plan for Wildwood, Westgate, Rothkard, that little area just west of downtown, and people want more of a walkable suburb to live in. They want to walk now to coffee shops and stuff like that. And I know in my community up on the west side, Christie Park, we just the development just got finished. We just put in 37 commercial units, and there's restaurants, and there's pizza place, there's taekwondo, there's dentists, and all of that stuff now makes the community more enjoyable as well. So these little commercial strip malls are getting upgraded, or they're getting built, and people want to be next to that. So if it is going on, you got to keep an eye on that as well.
Yeah. So there's a question in the chat here. With present economic scenario, would you say it's a buyer's market now? If not, when do you expect the buyer's market to happen? Would we like to purchase a house now, or should we wait?
So great question. That is awesome. We had a property go out today. Tim, where was that one that Daniel wanted to see? It was in Queensland. So a property came on in Queensland. It's on the market right now. It came on for 514 or something like that. First of all, that's a little high for Queensland. So we know that straight off the bat. And Daniel was asking us, he's one of our crew investors, do you think they'll take $30,000 less? And it just came on the market. So what is happening with this market is that we're an all-time low. When we say all-time low, we're about to hit 2,200
all-time low in listings.
In listings, sorry. All-time low in listings, 2,200. We're normally at this time of year, Tim, around 5,000. Yeah. A normal market for us is 6,000 listings. So we're at 2,200. Okay, so what that means is no supply and there's plenty of buyers. So you know who's in control right now is the sellers. So it's not a buyer's market. Will it turn around? For it to turn around, we need more supply to come on, which they will. We know that's going to happen in the spring or just before the spring, just because interest rates, a lot of people's terms are coming up and they got to qualify at the higher rate. They automatically qualify, but their rate goes up. So the properties, and this is the biggest problem with interest rates jumping so quickly, is that if people are locked in, I know I have one rental property in Tuscany. Those tenants are signed for a 2-year lease, and it's a real drag because we would probably get another $500 rent on top of what they're paying. So if the mortgage doesn't come up, thank God, but when the mortgage comes up, we would have to pay more. And if they were still in there, we couldn't get any more rent, so we're at a negative. So you need to understand that just because of that factor, people will get caught out. Okay.
Yeah. And the bottom of that is a wise purchase now. What we're telling our clients right now is if that property comes up that's in your price range and it's going to cash flow, buy it. Mm-hmm. Like just jump on it right now, because as more and more houses start to come on the market in February, March, April, is like I said at the beginning of this, you're going to start to see a feeding frenzy, and there's going to be multiple offers and people are going to bid the prices up, and it's going to bid them up out of the range of investors. So someone homeowner might come in and they want to buy that house and they'll pay as much as they want because it's an emotional buy for them. But our investors, they can only go so high, like they'll cap out somewhere, and if they go beyond that, the property no longer cash flows, so they're out of the game. So what we're saying now is if the property comes on, it's in your criteria, it cash flows, buy it now because you don't have that feeding rent.
Yeah, and now to me, there's two segments that we believe are going to really take off. One is the condo market. We ran the numbers in previous seminars where a 2-bedroom, 1970s build, 1,000 square feet, could have 1 bathroom, maybe 2. You know what? In Toronto, they sell for about 7, maybe 650,000 right now. Vancouver is very similar, that vintage. And in Calgary, you can get them for $220,000. I mean, it's a no-brainer that just because of the affordability, and what's going to happen in Calgary is people that were once in the 450,000 qualifying range last year, this year, they drop $120,000 just because the interest rates went up. So their affordability comes way down. The other thing that's going to make Calgary boom is that rental rates have gone up dramatically. So when you work out the rental rates compared to home ownership, and when you get into that affordability range under 300,000, the numbers work where why should you be renting? Why shouldn't you own? So is it a buyer's market? No. Should you jump on something? Yes, because we believe the market's just going to continue to go up. The other area that's going to go up quickly is the Northeast. We've seen this in back in 2006, 2007. It went crazy out there. And because of the migration that's coming here, a lot of these families, like I actually was in Marlborough Mall the other day. I was at Maxwell Arena and we had an hour to kill off, and I was up there and I thought it was wonderful up there. I couldn't believe the different sorts of people up there, people from all over the world. And if there's migration coming here, that's just going to boom out there. And I think that's fantastic. And why is it going to boom? Because of affordability. It's as simple as that. Back in 2007, what happened? 2008, what happened is the Northwest got so expensive. I mean, we couldn't find bungalows under $500,000 back then. We remember because that was our sweet spot back then to get a rental and rent it out to cover our costs. And we just couldn't find anything. So we had no choice but to go in the Northeast. Guess what happened in the Northeast? It went from 360 and I remember all the way up to 450. But there's different areas in the Northeast that you got to invest in.
Yeah, so when we do put clients in the Northeast, we have to educate them on the pockets that are good to get rental property in, and there are certain pockets that aren't so good. And you could probably say that about every quadrant of the city, but the Northeast in Calgary just seems to have some sort of stigma about it. But like Azad said, you know, the people living up there, most of them are decent people, just like everybody else. And it's a great place. They have great restaurants up there. They've got great unique stores all over the place. So, you know, it's also close to employment hubs like the Peter Lougheed Hospital and Rockland Mills and the airport. So you're going to get great tenants up there.
Yeah, not only that, the C train station runs straight through there. We love to be as close to that as possible. And the ride downtown on that C train, you could be like at Whitehorn. Is that the last? No, it's not the last station, but you could be all the way at Whitehorn where the hospital is there, and be downtown 12-16 minutes on a C train, which is unbelievable. If anyone else has any questions, just throw them in the chat. We're happy to answer anything.
Yeah, so another thing that always affects the economy is building costs. If you look at these numbers here, building and construction cost rose 22% in the first quarter of 2022, surpassing 21.9 in the previous quarter. The largest increases were in Calgary and Edmonton. Calgary's building costs went up over 30% this year. That's huge. So what that's going to do is it's going to drive the cost of new builds really, really high. So it's going to help investors who own pre-owned properties, which most of us do, and it's gonna drag those prices up as well.
Yeah, and this is a huge factor in making money in real estate, is understanding what's going on in that community, how much per square foot to build a property. And as Tim's showing here, 31%. I mean, I was doing basement renovations, Tim. My budget went through the roof. Like it was like, okay, how much is it going to cost me? Here's my wallet. But this is huge to understand that if a brand new house and you're buying, like say up in Aspen, and you go into Coach Hill or Patterson, you get those older properties. There's a massive difference from brand new to existing homes and then renovating homes. The other thing that's going on, and we noticed this earlier in the year when we've seen a lot of our clients upgrading their homes, they were looking at building brand new, and these people are high net worth people, but they were looking in, say, the Watermark out in Bearspaw area. They were looking in Springbank to build brand new, and their costs were up around $2 million to buy the land and build, say, a 3,000 plus square foot home, fully finished. And you can buy that same product, and that's what shifted these people. You can buy that same product in Aspen, in Elbow Valley. We bought one in the Slopes. The same square footage, but maybe a few years older for the 1.3 range. So there was a massive difference from building brand new to existing properties on the market.
Yeah. Okay, so moving on, the next thing we're going to talk about is office space. It seems to be every time you open a news article about office space in Calgary that, you know, it's at a historic high, the vacancy rate. It's actually coming down now with all these smaller companies, these tech companies moving in. We're at 27.5%, which is actually lower than the high. It reached about 35%. In this is a downtown office space, not surrounding areas. And what Avison Young is saying is that they've begun to flatten and trend downwards as more employees return to the office at the beginning of the fall season. So for us, COVID's over and there are no more restrictions in Alberta, and companies are asking their employees to go back to the offices now. So what they're doing is, if the companies have grown, they need to lease more office space. And you're not seeing new buildings being built. So eventually, all of this empty office space is going to get absorbed with new companies moving in and growing companies that are here existing. And you're going to see, once the cranes come back, you're going to know that Alberta or Calgary's office vacancy rate is very low again. And we're seeing that start right now. So what we're encouraged about is when that office vacancy rate comes down, that means more people are working, there's more people coming to the city, and it helps the real estate market. Yeah,
I mean, they have turned some of these office buildings into residential buildings. Not many, but they try to.
To me, that's just a political move. You turn these older office, C-class office buildings into, you put, 30 or 40 rental units in there. Mm-hmm. How much is that helping, the housing problem for low-income people? Not a lot. But if you look at the cost per square foot that they do to change these things over from office space to residential unit, it's massive.
I think the government subsidizes.
Yeah, it does.
Sure. So the best thing about this slide is that we've gone through the worst, Tim. I mean, it got really bad. 35% vacancy. It was really bad, and it's on its way up, and it's only going to get better and better. And then guess what? All of this office space that's left over, it makes it more attractive to companies that are holding onto office space in Ontario or BC, because it's so expensive out there. And we've seen this before. We're not just making this up. We've seen where head offices actually move to Calgary and they bring everybody out here. So we feel that with what's going on in the economy, that is opening up again, and the possibilities might be there as well for companies.
Yeah, and we see it every day. Our office is downtown. You can see the buildings behind us. This is actually our second office that's downtown in the last 5 years or so. The rush hour that we get coming to work and going home, we can actually notice it now. During the pandemic and a little bit after, we didn't notice any. It was great because we could get down here in 15 minutes from where we live. I'm in the south and Azad's in the west, but now you're starting to see that rush hour come back, which it's a bit annoying because you got to sit in it, but it's also a positive sign for the economy because people are going back to work.
Yeah.
So, it's one of those necessary evils that we put up with in our business.
There's a question there, Tim. What are the best communities in Calgary that cash flow fits your system? So, Ray, we've got a great seminar for you in 2.5 weeks, I think, 3 weeks. January, we always start off the year with best communities to invest in. And we go through community by community. I mean, it's a great webinar. There'll be a lot of people on there. So, Ray, that's a long-winded answer. We'll give you that one in 2.5 weeks' time.
Yeah. Okay, moving on again. Quality of life. We talked about this a little bit. We've been dancing around this the whole seminar, but the quality of life in Calgary, maybe not today because it's -30 out, but the quality of life is, we think, right up there with most other large urban centers in Canada.
Well, I think Calgary was rated #1 in the world for
yeah, it's they have these rankings and they take a lot of things into consideration. In Calgary, last year was #1 and now it's like #3 or something like that.
Okay. No, but Calgary, honestly, living here, I came from Sydney, Australia. People are like, why are you living here? I actually love the changes in the seasons, and people are like, this weather's crazy. But Calgary itself, I mean, we've got the mountains less than an hour and a half away. Whenever I've got visitors in town, we're always going out there. People are just so friendly here and safe, Tim. Like as you said before, there's nowhere in Calgary where you wouldn't get out of the car and walk around.
Yeah, if all you have to do is watch the news and there's they talk about all the crime in other big cities around North America and the world. And what Azad just mentioned is I would not have a problem going anywhere in this city at any time of the day or night and walking around. It's just a very, very safe city to live in. Do we have problems, societal problems like other cities? Yes, we do. But there's not as many as other larger centers. Some of it might have to do with the seasonality. Yeah, it gets cold in the wintertime, so it doesn't attract certain people. But we have a very good policing system. We've got a very good bylaw system, and it's fair as well. So we attract people from all around the world, and we just seem to all get along together, right?
Yeah.
We don't see the gang things that you do in other cities.
Yeah, and Tim's got a few other points here. Great place to raise kids. I mean, you couldn't think of anything better. My kids are in so many sports, I can't even keep up. It's a very active city. It's a young city. The best thing about Calgary, no one's from here, Tim, except you. And you're not here really. But you know what? It's so easy to meet people because no one's really from here, and it's easy to make friends and make new friends. Anyway. Daycare facilities are abundant. Public transport is well funded. I mean, the public transport here, the C-train system is very well run. We're getting it upgraded. We're getting new stations down south. And then the bus service, they got bus on demand now, which I think is unbelievable. Hospitals and healthcare facilities. We've talked about the hospital down south there. It is massive. Like when you drive past that thing, I don't know, Tim, if they're using all of those floors in there, but it's massive. And now the Foothills Hospital is got their cancer center. It's going to be opening up, and then Peter Lockheed is expanding.
Yeah.
So it's the healthcare here is unbelievable. And Tim, not only that, with healthcare here in Alberta, we have better coverage than other provinces.
Yeah, and things like healthcare and transit and things like that. Everybody loves to complain about it, right? We all think it could be better. It could be better funded. The money could be spent, better on it. But we're actually doing very, very well when it comes to healthcare and when it comes to transit, things like that. Most people get the healthcare that they need, right? We're publicly funded, so it's different than it is down in the state. And while we all love to complain about it, there's very, very few people that it will turn into a crisis. That's just what I want to say about it. I know so many nurses and doctors in the city, and they are very, very good at what they do, and they care deeply about what they do. So I'm not going to slam healthcare in the city.
Yeah, we've got the arts and culture scene thriving, which is, I think it's really, really cool for Calgary. And then recreation facilities. I mean, I was down in Seaton, the YMCA down there the other night, and I was watching this flow rider. I think it's called a flow rider. It's a surfing machine.
Oh, yeah.
They've actually got in this YMCA. I couldn't believe it. Those things. I actually know of the company that provides those. They're 1 million to actually purchase and install. So it's a huge investment, and they've got one of these things in a public rec center, which I can't even believe that. And some of these rec centers are unbelievable. There's libraries, the gyms are unbelievable, the hockey rinks are unbelievable. I mean, the Seaton one that I was in the other day even has a diving. They had a diving tournament on while I was there, and I watched it, and I thought it was unbelievable. And once again, easy access around the city and to the mountains, where a lot of Calgarians enjoy every weekend, Tim.
Yeah, so basically what we're getting at is this quality of life thing is going to attract immigration to the city. It's going to attract renters who want to live in a city that's affordable. All of these things that we talked about throughout this seminar are things that are going to contribute to the economy, which is going to lead to the booming housing industry we're going to see in 2023.
Yeah, so a couple of other things that Tim and I wanted to make note of, and you really have to couple this with the whole presentation. So if we didn't have the quality of life, if the oil sector wasn't going the way it's going, if the incentives like the tax rate here in Alberta or the healthcare system, if those things weren't all coming together like it is, these two major reasons why Calgary is going to boom is one, supply levels are so low, so that contributes to that, and the migration. And another thing as an investor that we have to keep in mind is that we're landlord friendly here. So we know of investors, because we have investors all over the country. Our crew investing program is done all over the country, and we have people that help our investors out throughout the country. And we know people in Winnipeg that are selling right now because they can't increase the rents because there's landlord controls in Manitoba. So with interest rates going up, some people there are forced to sell because they can't cash flow on their properties, and it doesn't make sense anymore. Where Alberta, we don't have that. Yes, you have to abide by the Tenancy Act. You have to give 90 days notice to raise your rents, but you definitely can do that.
Yeah, and if you're a landlord in Alberta right now and you start hearing governments talk about rent controls, but it's time to start to worry. But fortunately, no matter what political bent our government is, whether they're on the left or the right, none of them have talked about rent controls. So, we're very fortunate in Alberta here that we can always charge a healthy market rent so that there's a profit margin for landlords. And, that's why we're in the game. We're not out here to gouge tenants, but, we're also here to make a profit. So we want that rental rate to be above the costs.
Yeah, I guess we have a question here. Any more questions to throw them in the chat? Ray's just asking, short-term rentals, Airbnb a good option in Calgary? Ray, great question, and we'll tell you why. Yes, it is thriving. There are a lot of people coming into town on short-term contracts. So the need for Airbnb is huge. Our clients are making good money. And what we love about short-term rentals, and to be honest with everybody out there, at one stage we're telling people to get the furniture out and don't do short-term rentals. But right now it is thriving, and it's a great way to maximize your rents and beat the interest rate that's going on right now. So that's what we're actually telling people. If you're not cash flowing, maybe you could look at Airbnb, or you could look at a rent-to-own situation, or you could look at short-term rentals.
Yeah, and the thing about an Airbnb is it is a little bit more management intensive. You do have your place inspected a lot more, cleaned a lot more. So the upkeep on your unit is usually quite a bit better than if you had some long-term tenants in there and maybe they didn't look after it as much. You have to keep your place up to a certain standard, and so do the guests that are staying at Airbnbs. So you're going to have a clean unit that's going to attract good quality Airbnb guests.
Yeah, and it'll be maintained because you'll be checking on it all the time. So that is our presentation. We'll get to the next slide here. Just quickly, there is a freebie for everybody. This is our ebook that we've written. It's called 1 Million Reasons to Buy Real Estate. There is really 1 million reasons to buy. We give you that in there. And it goes through the core fundamentals of investing in real estate. If you are thinking about investing, please download that. It's free. It's a good read. There's plenty of stories in there. And you can find that on our website. I'll put that in the chat so you've got a link to it.
Yeah, and it tells you, like as I said, the fundamentals. It tells you the returns that you can get in real estate and why we do it. So it's a brief book, but there's a whole lot of meat and potatoes in there that tells you exactly why you should get into investing in real estate.
Yeah. The next book we wrote, Fearless Real Estate. As you can see, it's loaded full of our clients. We love this book. I mean, when we started in real estate, we both read Rich Dad Poor Dad. This is over 20 years ago. It changed our lives. The only thing with Rich Dad Poor Dad, it's a great story, but it doesn't give you any of the meat and potatoes, we like to say, that you need to move forward. So this goes through step by step. What we love about it is that you could see what our clients have done. And our clients, Tim, have been everyday people. They've been single mothers. They've been teachers. Yes, we do have some doctors and some pilots, and but we've got some people just starting off, stories about that, on how they're cash flowing on their properties. And it shows you how you can do it too, even in this market, even with these interest rates. It can show you how you can move forward.
And it explains all of the strategies that are relevant in today's market. So whether it's flipping, whether it's buy and hold, whether it's agreements for sale, whether it's Airbnb, whether it's pre-construction, it tells all the strategies, and it gives stories of what our clients have done with each one of those strategies. So it's real life examples. We're not just making this stuff up on the fly. We're actually telling you what our clients have done and how they've made money with real estate.
Yeah, and how we've lost money too, so you can learn from that. The next is our Crew Investing course. There's over 100 hours of content. It goes through all the strategies. It goes through, someone was asking about Airbnb. It goes through how to put together an Airbnb, actually how to do Airbnbs without actually even owning any property, which is an awesome way to make money instantly from real estate. We go through lease options. We go through rent to own. We go through agreements for sale. We go through joint ventures. We go through VTBs, which is vendor takebacks. We go through house hacking. It goes through every strategy there is in investing in real estate. And the thing about us is we simplify it and we make it real. So you can dissect to see if it's for you or not. We show case studies in there on how our clients, even in this market, are making $100,000 per flip. So if you really want to know how to invest in real estate, this is $97 per month. We put that back on there. We took it off for a long time, but because of the economy, we decided to put it back on there. It's $97 per month, and we've had huge success. And if you want to see the success that we've got from our clients, you simply go to the next page, Tim.
Actually, there's a question in here. So the 13 properties that fit your investment criteria, any of these properties that can be the BRRR strategy and still cash flow after refinance. The thing about that strategy, the BRRRR strategy, is you don't really have to stick to a specific price range. I know we've got Graham on the call today. He did the BRRRR strategy in a very small apartment.
Yeah.
So he was, under $200,000. He renovated it and he refinanced it, and he's going to rent it out after he gets this next one. But he did that strategy in a small condo that was under $200,000. So you don't have to stick to a specific price to do that. You can do it in small condos. You can do it in $400,000 single family homes. You can do it in duplexes. You can do it in very large homes. It just depends on your budget and your timeline.
Yeah, we have a whole video on the BRRRR strategy, and the BRRRR strategy is a great way. For people out there wondering what the BRRRR strategy is, it's when you buy a property, you renovate it, you refinance the money out, you rent it out, and then you repeat. So that's what the BRRRR strategy is. As Tim said, you don't need a big property to do it on. The whole idea of the BRRRR is making sure the ARV, which is after renovation value, is there once you renovate. So then the bank comes in, they reappraise the property, and you need a track record. And I know Graham in his building, the track record is already there that they were buying or selling for the $250,000 range. So he has quite the buffer in there to go in, do some lipstick to the property. And that is what's going to happen in the Calgary market with the condos behind us. We were doing this back in 2006. We would go in, put in lipstick. We would be flipping the houses, not burring them for our clients. And that is really, really going to come back because that market's going to take off. And congrats to Graham for taking action, pulling the trigger. He jumped on it straight away. And now
going to his second one right now.
Yeah, and he's a crew investor, so that's awesome. So yes, it can definitely be done, and they won't be in those 13 properties per BRRRR. That's a different strategy all up. And if you are doing the BRRRR, you really have to make sure that the numbers are there 100%, or that when you get caught out and your money is stuck in the property longer than what you anticipated.
Yeah.
Okay, so if you're thinking if crew investing is for you, by all means, we don't stress that you have to do this. We don't want to put that on anybody. If you want, but you can go and see how these people have made money. Some of them have made it instantly. Some of them made it over 3 years. What we do when we meet with our clients, we put them through a whole plan. They work with Danielle, and we work out how to move it forward to get the most amount of properties, make the most amount of equity, and get the most amount of appreciation the quickest possible. And that's what you need instead of guessing. And not only that, the difference between us when you work with us, we don't just buy you the property. We're there for the whole term of the property. We're there to help you get it rented. You actually have to do our training. That's mandatory if you are working with us. You have to go through our landlord training, and we have to make sure you know how to run your new business. And it's a business that could take up to 1 to 2 hours a month and can make you, well, our program is designed to make you $1 million.
Yeah, and my favorite thing about Crew TV is all of the interviews with the clients that have done the various different strategies. So it's not just one thing that we're talking about here. We're talking about all the different kinds of real estate investment strategies that our clients are doing. And the interviews are telling you actually how they did it. So you can see that other people are doing it right here in this market, and you can do it as well. That's my favorite thing about Crew TV.
Yeah, so if you're thinking if real estate's for you, we've got to stress this, it's not for everybody, but if you're looking for a team to move you forward, and it doesn't matter if you're in Calgary, it could be wherever. We've got realtors in all the cities right now that we've connected with. We're here to help you, and it could really change your life. We're not just saying that, it's definitely changed some of the kids we're working with, anybody we're working with right now, because it's going to help you select the right property that's going to be a winner. I mean, you hear these horror stories out there that people bought such and such property, and we're just wondering, well, who told you to buy that? We're the first to say no, Tim. Yeah. And that's probably our problem is we're so selective on the properties we choose for our clients that we have to run it through the smell test. And once we do that, our clients are going to succeed.
Yeah. So if you want to book a one-on-one meeting with us, just an email is the best way to get a hold of us. You can call us or text us as well, but our email addresses are here. Reach out, we'll sit down with you. We're accepting meetings in the office again, which is great. We're not doing anything over Zoom unless you really want to. So come on down, meet with us, and we can get you started on a real estate investment plan to start your real estate investing journey.
Yeah, and so yeah, if you like what you see in 2 weeks' time, I know Ray is dying for this one. We actually have best communities to invest in 2023. We actually run all the stats. It's pretty intense. We go through each quadrant and we pick out our best communities in each quadrant, and it's very, very informative. If you like what you're seeing, we hope to see you again. If not, we hope to hear from you, and have a very good Christmas.
Yeah, and thanks for joining us, everybody.